Welcome back, students. This is going to be the first video on chapter one, and let's just get right into it. Share my screen. Pull my PowerPoint here. So to begin with, we're going to have learning objectives, discuss the history of taxation in the United States, three types of tax structures, various types of taxes, discuss the criteria for a good tax structure, objectives with federal income tax law and recent tax reform proposals. Some more learning objectives. I'm not going to read through all these because I'm going to be reading you the PowerPoints, so it's hopefully you pick up on it there. History of U.S. taxation. We're going way back, back to the Civil War. Government relied on custom duties and excise taxes until 1913. They very briefly had an income tax from 1861 to 65 to fund the Civil War. That didn't continue after that. Income taxes kind of came around later, but that was the first income taxation that the United States had. As you can see, the next bullet point, the 16th Amendment was passed in 1913 to make federal taxation of individuals constitutional. I've got a couple of videos here, which could be helpful, could be interesting. I'd say it's worth your time to read through it, just to get a good feel for where and how it started. The history of U.S. taxation, tax laws were codified into the Internal Revenue Code. I'm going to be referring to that as the IRC. That is the common acronym for it. 1939, 54, and 86. In 39, you're going to see that less than 6% of U.S. citizens were taxed. In 1974, more than 74% were taxed. So you're talking difference of 35 years there, and it changed very dramatically. Tax revenues used to fund government operations. I feel like that's probably basic knowledge, but here's the bullet point for you. Revenue sources. So this is where the government gets its money. 54% of it is from individual income taxes. Then you got Social Security at 30, corporate taxes at 9, and other could be gas tax, sales tax just applies to states. The NIT tax, net investment income tax, that would be another portion of that. So that came around with the TCJA. I'm not going to quiz you on the other, but just know that there are other types of tax rate structures. Okay, so this is how the U.S. kind of goes. It's a progressive tax system. The more you make, the more you get taxed. So progressive rate of tax increases as your tax base increases. So I made $50,000 this year. I'm in the 12% bracket. I made $250,000. I'm in a higher bracket. It's progressive. The more you make, the more you get taxed. Regressive rate of tax decreases as tax base increases. You don't see that a whole lot. I'm trying to think if there's any European countries or South America countries that kind of operate that way. Nothing's really jumping out at me. You really don't see that all that much. Typically, you're going to see progressive. Proportional is a flat tax rate is the same for all taxpayers. Look at sales tax. If I buy a Twinkie from the gas station, I'm going to be charged the exact same amount of sales tax as if either or any of you had purchased that, a Twinkie from that gas station. Sales tax is very often referred to as a regressive tax. It's proportional, it's regressive, it's kind of the argument you want to make. It's viewed as regressive in some cases because if I buy a Twinkie and I get charged sales tax on it, my income is X amount. If Elon Musk buys that same Twinkie and pays the same amount of sales tax, his income is X times a bajillion. So he's kind of paying less in as it pertains to his income base. His income base is significantly higher than mine. we both buy the same thing, we both pay the same amount of tax. Is that proportional or is that regressive? It's you will often hear that argument made for sales tax that it is a regressive tax. Who pays the lowest taxes in the United States? There's another video for you guys to watch here. Objectives of the federal income tax law. With the ability to tax comes power. You hold a certain power over your base there. The government holds power over us as citizens who work and pay our taxes, and they decide how much to tax and what to tax and when to tax it. This is where this all kind of comes into play. You've got the economic side of it, promoting certain activities, think tax credits. They recently had the electrical vehicle tax credit. I believe that was for 7,500. I didn't see a lot of that, but it's the government promoting clean energy by giving a tax credit for these electric vehicles. That's where promoting certain activities comes in. Social, that is, I'm trying to think of a good tax credit for that. Earned income tax credits. You're looking at somebody who doesn't make all that much, giving them a little bit of a boost. That's the social side of it. Tax reform. Trying to think of a good example for that. My cat will be bothering me during these videos, just as a heads up to all of you. Tax reform. Tax Cuts and Job Act, that completely changed the way taxes are done. Itemized deductions went way down. People claiming the standard deduction went way up. So that's the tax reform side of it. Types of tax rate structures, we've got marginal, the tax rate applied to an incremental amount of taxable income that increases the tax base. So you're in the 22% bracket. If you earn one more dollar, that dollar gets taxed at 22%. That is the marginal rate. You will often hear marginal rate and effective rate. Effective rate is, I made $100,000 and my total tax liability was $10,000. My effective rate is 10%. I paid $10,000 in taxes on $100,000 of income, 10%. Marginal is if you were to make one more dollar, what would that be taxed at? And in the example I used previously, it would be 22%. Average, that's effective rate. Average and effective are going to be very similar. I mean, total tax liability divided by taxable income, total tax liability divided by total economic income. Economic income is income, it would be the same thing. Criteria for a tax structure. Equity, fairness to all. Believe it or not, taxes do try to be fair. Other people will disagree, but that is part of the goal. Certainty, stable, unchanging. You want certainty as it pertains to a tax structure. Convenience. Some people might disagree with this. Paying your taxes, not overly difficult. You fill out a tax return. We'll be doing examples of that in class. You're going to see sometimes it can be easy, sometimes it can get complicated. But no matter the tax return, I've never struggled too hard on it. The form is pretty easy to fill out. It's the matter of getting all the information that is typically the hard part. Economy, low cost compliance and administration. You don't want to bog it down with too many things to do. Simplicity, not complex. Imagine if you're setting up a business, right? You want it to be kind of all these things. You want it to be equitable, everybody gets treated fairly. You want to make sure that you're in a stable environment. You want to make it easy to use. You want to make it, economical, low cost to keep it running, and you want to keep it simple. That's good rules for any system you're setting or using. Determination of taxable income and tax due. This is going to be a very useful slide for you. I would pay attention to this. I would, as it mentions here, I would print it off. I would save it to your computer. I would make sure you understand the way that the 1040 form looks and goes. And here, you're going to start off with your total income, less exclusions, and that gives you your gross income. Then you have deductions, and that gives you your taxable income. Your tax rate is whatever the tax bracket you're in. Income tax before credits, then your credits, your liability, any prepayments, and then balance due or refunds. Other types of taxes, state and local, commonly referred to as SALT, state and local taxes, estate taxes, gift tax, just some fun information for you. Gift tax very, very rarely ever paid by the donor. It's can be paid by the donor if certain criteria are met, but otherwise the donee never really pays. And it's I see that question all the time. I received $50,000 from my parents. How much I owe on taxes? You don't know. They gifted it to you. If there's a tax to be paid, it will be paid by them. Property taxes, federal excise tax, sales taxes, employment taxes. 15.3%, half paid by employee, half paid by employer. That's Social Security and Medicare. Self-employment taxes. I have a small Etsy shop and I sell some things. I'm self-employed. We pay a separate tax on that. It's the 15.3%, but you pay all of the 15.3. You are employee and employer. And then unemployment taxes. I think that is a good time to stop this video, so we will continue in our next video.